Good afternoon, everybody. Once again, I'm just going to bring the awareness starting April 1 of 214. I have a monthly chart on the S&P 500. Back in 2009, we talked about the big moves that it had. This were the moves that it had. It came off of that bottom, came right through here in 2011, pulled right back here to that support level where the lower end of that is. This was the upper end of where we dipped again in 2012. This lower lateral trend line going diagonal, so we're going to reach it right up there. The 10-month moving average, I just would like everyone to understand on the S&P is, believe it or not, I'm going to show you right now. And the thing that I want people to take note of again is we haven't missed one yet. That's 1753 on that S&P. Now, having said that, this lower trend line of support in 2011, the fade back in 2012, and then of course we went up and we tested that trend line and we've gone straight up. So that trend line there is going to become that. What I will show you here is I'm going to take out the trend lines. And one of the things about this calendar year, 2014, so far, the S&P has managed to take out the 2013 high and 2014 high. But I'm going to tell you that we're going to be going down. And I'm also going to be telling you that so far, April 1 starts tomorrow. We are overbought on the S&P right now. And the rising 10-month moving average is about as bullish as one could get. There is no doubt about that. Not whatsoever. However, though, what we will show you from a weekly perspective on the S&P is that this is what it looks like, and that's a major resistance. We've had 1, 2, 3, 4 weeks at that top, and we haven't been able to take it out on heavier volume. This is the new week that's starting, and that, yes, we did pull back in January. We already know that. So what we're going to do is that we're going to zoom right here. I'm going to draw some trend lines once again. I'm going to draw this narrow range weekly consolidation here. One of two things are going to happen. Either we're going to break out and make another high in this weekly pattern, and or we're going to break down. Now, having said that, let's go back to the 10-week moving average. And I'm going to give you that right now, MMTs. And here's what I'm going to say. The 10-week moving average is now at 1842 on the S&P. The 20-week moving average is 1829 for now. The 40, which is way down here, and the 50 is way down here. Now, let's just take a look at what could happen. We're going to be going into a major earnings season. We have that high frequency. We have specialized in high frequency for the last 10 years. One of the things that I will show you today is that the S&P 500 closing out at 1872.34. Let us not forget that 1883 right here was the highs. We had that 1883, we had 1882, we had 1883 in this week, and now this new week is starting out with one day, and the high is 1875 today. Now, what had happened last year is that every time we got into one of these really good consolidations, we would break and we would move higher. Now, one of the things that we're going to say is about high frequency trading. And high frequency trading, if you go to stockmarketfunding.com, you go down here to HFT, okay? You watch the Ghost Exchange movie that we're in. We had called that capitulation in May of 2010. It was May 6th, 2 weeks before. We said there was going to be a big sell-off. You can click up, get the free trial. We will teach you everything about how we have traded this S&P And we did. Flash crash on May 6, 2010. That's the video right there. Click on the link. We have not missed one yet. What we are going to say, though, is if that high frequency algorithm has to do the following. This is the S&P 500 index. Now, within a high frequency model, all they have to do to break these highs that I'm talking about in the high frequency is buy these leadership names to run and break through that resistance. One of the things that we're going to say, one of our best stocks today was BIIB. Then you had ISRG. Then you had Visa making another high up here. And BlackRock, once again, that was oversold and it's come back up. Look at when. Now, a lot of these names in the S&P 500 here are overbought. And it's going to be a high frequency algorithmic buy basket of 500. They're going to buy a certain 10 or 15 of these stocks in a high frequency model to break these highs up here, and we're automatically going to be going short. Another thing in the algorithms, once these algorithms break, there's a lot of risk, just like there was in other flash crashes and whatnot. Yes, it's been a great bull run for 5 years. Well, March is over. 5 years ago, we had ended the calendar month of March 5 years ago. And guess what? We were on our way. And we were. And now, here we are 5 years later, going into April 1st tomorrow, and we're at a major top and whatnot. And the markets have not been able to pull back. Just remember, that big money is still on the sideline. And that big money is going to be a seller, not a buyer up here. The easy money in the last 5 year period has already been made. Beware of high frequency trading and beware of the algorithmic will buy a big basket in here of the S&P 500 stocks and they'll run them higher. This is all 500 of them right here. Look, now there are leadership stocks. BIIB, we made a lot of money on BIIB today. It got terribly oversold. So in the short term, everybody, we are, in the very short term, we are oversold in some equities, but in the longer term, we're overbought still. Short term, equities go higher, then they sell off intraday. And we have showed plenty of stocks that did that in the S&P 500. And I just want everyone to know that BIIB was extremely oversold. Look at that weekly, look at that support level. This was the greatest high flyer. It's finally got support level there at the 20-week. Intuitive Surgical. Well, this one's had a lot of controversy on it, but it had a nice run, and it too is rebounding above the 10-week. Here's another one that got a lot of support at the 50-week moving average. On CI is the symbol. That is one that is performing. Visa is got a reversal, made an all-time high, but it came back. It's below the 10 and the 20-week, and that's in the S&P. BlackRock, right here. That one here is major support level, had a nice pullback, and it's a leadership. Wynn Resorts has been a leader as well. Had a nice top here. It's pulled back, but nonetheless, it's going to take these stocks to break it. EW, which on a weekly moving average, Life Sciences, EW. Look at that wonderful movement and all the weekly moving averages. Take a look at beaten down and forgotten about how CMI, Cummings, it's made an all-time recovery. And it has at 52-week highs. ACT, let us not forget, it too been a leader in the S&P pulling back. WDC, of all Western Digital Corp, at all-time highs. That's contributing a big move. Gilead Sciences, the one that is pulled back to test the 40-week. This one is a leader in the biotech. And of course, the IBM, once again, has made a recovery from the 2014, and the earnings have been nothing but horrible. It too is in there. So one of the things that we're going to say again is that on the S&P here, it's going to take a round of different high frequency machines to drive those equities higher to get us through that resistance area. Back to the monthly chart on the S&P. We came down, and yes, let's just take a look. That 10-month is rising. That 10-month moving average right now is at 1750. And yes, we are going to be trading the S&P and making a fortune on the put side. And one of them that we're going to be looking at for a longer term trade is the 1800 put. June 1800. It's way down here. This contract was well above $100 here. Now down at 24.80. That's a longer term trade. Don't forget that. That's not an intraday trade. We will use the short term April 19th expiration on these indexes on that S&P. And the thing about it is there is going to be a nice size pullback. We got earnings season about 2 weeks away or less. Quarterly reports are going to come in. They're not going to be that bad. However, the market needs to pull back 10% to get that big money off of the sideline.